Back in 2014, Purple Group offered a solution to the market, EasyEquities, democratizing access to stocks and creating a channel of accessibility that didn't previously exist, essentially enabling financial freedom for more South Africans. 10 years later, EasyEquities boasts 900,000 active retail clients and a growing institutional investor base, while Purple Group continues to invest in new products and regions. CEO of Purple Group, Charles Savage, joins me now. And Charles, democratizing investing via tech is a big deal, right? Especially in a country like South Africa, where both the financial and technological divides are vast, and I guess where sheer financial literacy is lacking as well. So take us back a bit. What sparked your interest in investing and fintech to start off with?
Yeah, look, I have to go back long before 10 years. I mean, I remember investing my first share sitting on the jammy stairs at UCT, and cell phones had just come out, and we used to phone the broker and buy shares over the phone. And the engagement, was layered with complexity and language and all sorts of things that just made it really intimidating experience. And fast forward, that was 1992. Fast forward to 1996, and I found myself building e-commerce sites for emerging online businesses in South Africa. And I was approached by a group of people looking to set up an online broker. And their mission or their kind of vision was that the internet was going to change the game, and that by building an internet platform to be able to buy shares, you would democratize access essentially. And naively, in 96, we all believed it, but we never looked at the ecosystem to say, is the ecosystem ready for it? So, simply, could the average man in the street access the internet? And they couldn't. We were dialing in on 28.8K modems. It was slow. It was cumbersome. We didn't have credit cards. We were unbanked. And the infrastructure didn't support democratization. And then rather than trying to democratize access to shares, I ended up on a journey building sophisticated trading systems for highly sophisticated day traders, which is still a part of the Purple Group today, gt247.com. But in 2013, I was sitting on a beach in Mozambique, and I'd lost my passion for building sophisticated day trading systems. And I was questioning what I should do with my time and interest. And I went back to 1996, and I said, look, that purpose to democratize investing was well placed, but at the wrong time. What happens if we take all of the lessons that we've taken out of the last almost 2 decades, and is the ecosystem now ready? And the answer was overwhelmingly yes. So the ecosystem was ready, the technology had moved on. South Africa, had moved into a new era in terms of technology and access and, all those kind of things. And the biggest game changer, smartphone, was now in the game, and smartphone penetration was around 35% at the time, now well over 50%. And so I said, well, let's try again. And so fundamentally, it was really, it was a vision or an idea or a concept or a purpose that was born in 96, but its time had come to maturity in 2013. And so, we set about in 2014 is to create this easy access point so that everybody could get investing. And fundamentally, our belief is that if everyone invests, we fundamentally change the fabric of South Africa, the financial fabric of South Africa, and that ownership changes everything. It changes how we engage with each other, how we engage with companies and businesses, and how we uplift society through, making investments, etc.
Just going back a bit, where the premise for you ever since the start of the e-commerce boom, as you said, was that the internet could make investing easier for everyone, and that it was as early as 1996 that you thought the ecosystem was, was ready for this, and learned that it wasn't. Given what you know now, Charles, having built what you have and knowing what it takes, what do you say to that younger, optimistic, and perhaps, as you put it, even naive view?
Yeah, look, good ideas sometimes are just at the wrong time. And so you can have a great idea and just be executing it at the wrong time. And so you have to be persistent with your ideas, but also you have to be introspective, and you have to be considerate of the environment that you're launching your ideas into. So, enthusiasm and good ideas is in abundance when you're in your 20s, but sometimes those ideas are just too early, and you don't want to be the guy who kind of beats down the ecosystem and solves all of the ecosystem problems, because then it becomes a very difficult business to create.
Absolutely. Well, let's take a look at the growth, right? Because despite the growth you've seen over the years, despite the strides you've made, the last year has been tough. I mean, the company's moved from a profit to a loss. Some of the scrutiny the company's come under has been even tougher, Charles, and we've seen your share price drop considerably. Still, you've said Purple Group is undervalued. Do you maintain that stance?
Yeah, I mean, of course I do. It really depends what lens you look at value through. And so, there are lots of lenses that you can look. And if you look through the income statement, then you would say that we're not undervalued, because, you look at the losses that we incurred in the last 12 months, and you say, well, look at the market cap, and, you could come to the conclusion that based on the income statement, the business is overvalued potentially. But that's one lens to look at value. And it's a very short-sighted lens, because it only reflects on the past and it doesn't reflect on the future. And it's not cognizant of what stage the business is in terms of its maturity. And so if firstly, we're 10 years old. And so you've got to look at the income statement through the lens of a business that's only 10 years old. And then secondly, you've got to understand that the economic model is built on the savings of everyday South Africans. And so they right at the start of their economic journey. And so if you like, they are the least valuable they'll ever be to us is today. They will never be worth less to us than they are today. So they're just going to be, get more and more valuable as they accumulate assets and as their salaries, increase. And so when you look at the customer cohort, which is you talked about 900,000 odd South Africans, that perfectly reflect the demographics of this country. So it's young Black South Africans who are upwardly mobile enough to be able to save and invest for themselves. In our view, they are the future generation of wealth in this country. And the only thing that is stopping them from owning that future is time. They're just young and they're early in their jobs and their careers. And we've managed to acquire this customer cohort. And as long as we retain them, and our retention rates are extraordinary, we literally don't lose customers, then as they inherit this wealth, we're going to be the platform that supports their wealth, their platform of choice that supports their wealth. And so when you look at that, if you look at it through the lens of the customer cohort that we've acquired, and you said, well, let's put a value on these 900,000 investors that perfectly reflect the demographic of South Africa, and in our view are going to inherit the wealth of the country, then you start to look at it in the way that I look at it and say, well, then it's very undervalued. And, if we just draw some parallels to businesses that are now much older than we are, that had similar strategies in different sectors, the one that really resonates with me was Investec 30 years ago. So, I'm 50 now, and I remember graduating from university, and one of the first offers I ever got was a credit card from Investec. And I thought, why is Investec trying to acquire me? I don't have a credit record. I don't have the capacity to own a credit card. But they basically took a bet that the future wealth would be owned by the university graduates of South Africa. And the success of Investec is built on that simple premise. And 30 years later, it's a multi-billion dollar company. And so if I look at our business, I'd say, well, what's the future Investec? Who's going to own these wealthy graduates? And I'd say we are. And yes, we've got a job to do to retain them. We've got a job to do to inspire them and engage them and make sure that they stay. But fundamentally, we've taken a long-term view on supporting and engaging and owning the future, the people that are going to own the wealth of this country in the future. Not dissimilar to what Investec did 30 years ago.
Even if, a small chunk of them were pretty unimpressed late last year by EasyEquities' decision to launch that 25 Rand monthly subscription fee, right? It caused quite a bit of a furore at the time. Now that it's been active for a few months, Charles, was the decision the right one to have made?
Yeah, 100%. There's democratization means that everyone should deserve access regardless of their economic standing. And so people were criticizing us for saying, well, by putting a 25 Rand fee, which is not a subscription fee, so it's It's a loyalty platform fee that if you don't demonstrably evidence certain behavior, and let's just focus on the easiest one. If you don't make a net deposit, i.e. just add R1 a month, then you're exempt. If you do that, you're exempt from the fee. If you don't do it, you pay the fee. And people were critical of us because they said we'd lost our path in terms of our purpose to democratize. But for me, democratization is one in two ways. Either you can invest your time or your money. Some people have got the luxury to do both. And what Thrive allows you to do is to earn your right to keep this platform free and available to you by just investing time, less than 5 minutes a month, and you'll thrive. Or alternatively, if you don't want to invest your time, or you can't because you're too busy, then your capital. And just R1 buys you the right to avoid that fee. And so I think the criticism, change is always going to face criticism. It was a very small group that criticized us. It looked like a big storm. Media gave it significant attention, which frankly actually shows you how big the brand is, and it actually is a very positive thing. If you think about this little brand that's only 10 years old, was front page of every single newspaper, literally, or in the country, electronic or not, around a very small change in fee structure. So now reflecting 3 and a half months later, did it work? Well, the old adage that there's no such thing as bad media. We reflected on the data to say, has our acquisition rate gone up or down or stayed the same? It's largely the same as it was. So we're acquiring as many customers as we were when before Thrive as we are after. Interestingly, though, we are acquiring more customers than we did before by virtue from competitors than we ever have. So before Thrive, for every customer that we lost, we only won back 77% of a customer. So we lost one customer and we got 0.77% back. Today, 3.5 months later, for every customer we lose, we win 3. So we've actually winning customers from our competitors. So the unintended consequence, which wasn't part of the plan, but no plan is perfect, was this discussion and debate about fees became an industry discussion about fees. And in the result, we're the winner because our fee structure is so much cheaper than anyone else's still. And so actually we're winning customers from all of our competitors because people who weren't our customers said, what's all this hullabaloo about 25 Rand? I'm paying 100 Rand or 150 Rand or 200 Rand. And so the unintended consequence is that we're winning more customers from our competitors than we ever have. And we are acquiring new customers at exactly the same rate as we were. So it's only 3.5 months in. And I don't want to say that it's perfect because there's lots of improvements, but it has been a success so far.
You talk about those unintended consequences, right, Charles? But part of the intent was to mold healthier investing habits as well. So to what extent is it changing behavior and creating, the behavioral outcomes that you wanted it to? And how do you see that then being extrapolated to deliver value to the group in the year ahead where your revenue lines come under a bit of pressure?
Yeah, Alishia, great question, because, I guess modifying behavior is not easy. I mean, the best in South Africa and potentially the world is Discovery. That's their whole business is behavioral banking or behavioral finance. So, what's the data telling us? So we had a declining trend, which all the way into the launch of Thrive. So all the way it was 18 months from November 2021, so more than 18 months, but November 21 through to October 2023. We had a declining trend in number of depositors and value of deposits. That was what we were looking to address. If you think the one attack that Thrive was really attacking was, can we turn this trend around despite the fact that we know the consumer is under very big pressure? So since the launch, October, November, and December, all 3 of those months are up on October's numbers, on September's numbers. So we've reversed the trend. The trend is, it's not huge reversals, but for the first time since November 2021, we now have an upward trend, which is a quarter old, of depositors and value again. So, and I don't want to give Thrive all of the credit. There's lots of other things and initiatives in the group that have been going on, but it is the principal attack weapon that we used. And so we have modified the one behavior we were seeking to modify. And then outside of that, we're doing more education than we've ever done, because part of Thrive is you can earn it by just doing a few educational courses. So we service over 100,000 videos, educational videos now a month. Prior to Thrive, we're doing about 20,000 a month. People are logging in more frequently and checking on their investments than they ever have. So yes, it's changing the behavior. It's small changes in behavior, so small percentages, but importantly, small percentages over time compound into big numbers. So will we see the results of that materially in the next 6, 12 months? Most likely not. But those small changes compounding over time, over 3, 5, and 10 years, are going to make a very significant impact on the group. So yeah, it's changing behavior.
But Charles, context matters in a very big way. And you recently referred to South Africa as being in a deep recession. What's reinforced that view for you on a broader scale? And how do you see that impacting this investment community you've built and continue to build, and its capacity to invest, whether in EasyEquities, Easy Properties, or Easy Crypto for that matter?
Yeah, so if you think about EasyEquities and where we sit on your personal income statement, we're the last thing that you get to spend on. So if you've got anything left over in your discretionary spend, then you get to spend it on us. So, first you've got to put a roof over your head, then you've got to, put food on your table, and then you've got to, pay for your insurances and school and all the other things. And if there's money left over, then you get to save and invest. And what we've seen is that as interest rates have gone up, and there's a 1-to-1 correlation, so 100% correlation, for every interest rate increase, people's capacity to save and invest has diminished to the point where interest rates are now, anyone in LSM 1 to 5 has got almost zero capability to save and invest, which means that end of their income statement is gone. And so we obviously don't know whether they're struggling to pay rent or they're struggling to do other things, but they have got zero capacity to save and invest, which means the interest rate has pushed South Africans right to breaking point, to the point where they cannot afford to make the necessary savings to secure a happy and safe financial future. And so for us, that indicates that we are in a deep recession, because you must understand that this, call it million customers, they're your top performing South Africans. They're the ones who have got the rigor and discipline to save and invest in the best and worst of times. But the interest rates have taken them so far that now they can't. And so they're unable to pitch up. And so, our context is we're deep in a recession. Our customers are at breaking point. And whilst we can't speculate on how far that breaking point is, I'm pretty sure that they are, missing things on credit cards and rentals and all those kind of things too.
Absolutely. Well, Charles, 2024 certainly going to be an interesting one. It's been an absolute pleasure catching up with you. Thanks so much for having joined us on Smart Money today.
Great. Thanks for having me on. Always a pleasure.